All right, the Fed just made their most recent rate hike, 0.75 percentage points. What does this mean for real estate here in our local market? Stick around to find out. Hey everybody, this is Brad Decater with the Decater Home Team. In this channel, we talk about all things real estate here in our local market in King County. So today we're doing the October market update to talk to you about what the statistics show, what that means, interest rates, lots of stuff going on, inflation, appreciation, all that stuff. All right, so the first stat that I have is very, very interesting. So if you take a look at the graph here, for the first time in quite a few months, we actually saw an uptick in the median home price. So prices are actually going up in the month of October, which has not been the case for the last 6 months straight. It went up by 2.3%. And if you look at year over year from October of 2021 to October of 2022, we are actually still up over 5%. So we are still overall in a year over year appreciating market, even though things have gone down, like in the graph shows from the very top of a April closing. So this is a really great sign and probably a little bit of a relief for a lot of the people watching, in that, we haven't continued to go downhill from the very, very peak there. We've gone down about 8%, and now we're kind of recovering. And this is kind of a sign of what I expect to see moving forward. Not that I think it's going to keep going up significantly, but I think we're going to be kind of leveling off until interest rates change and getting used to this new normal market where pricing is kind of getting back to a place where buyers can afford it. All right, next up, we're gonna look at new listings, pendings, and solds and see what kind of story that tells as far as the statistics go. So new listings in October, we had just over 2,600 listings, and that's coming off of 3,500 listings in September. So significantly less, about 25% less new listings came to the market here in October. What that's telling us is not a whole lot. That's a pretty normal seasonal change. If we look at last year in 2021, we went from 3,100 to, 2,600 to 3,100. And so again, from September to October, we have had a decrease in listings, new listings coming to the market, which is very common. Real estate is a seasonal thing, and we typically do get less listings as we go into October, November, and December. And then we start picking up listings once we start getting into springtime next year. So that's a pretty normal trend. So kind of the same thing I've been saying is that it's not a fire sale, everyone's coming to the market and tons of inventory is coming out. That's not the case. We are on a very similar trajectory to last year, and actually we had less new listings here in October this year than we did last year. So pending listings, we had 1950 here in the month of October, and back in September we had 1996. So we had just a little bit less, only 100 less pending listings than we did a month ago, which is actually a great sign, which is why I think it correlates most to this price appreciation here in October. Because what's interesting is we only had 100 listings less pending in October, but we had a significantly amount, about 900 less new listings. So we had a lot less new listings, but more pendings, which means that the demand has grown, at least in the month of October, which makes sense because the end result is that the prices actually did go up. So an interesting turn in the market here in October. I think the pending statistics in line with the new listings and the overall pricing kind of tells the story here. All right, so sold statistics, we have 2,068 here in October that sold, and that's coming off of about 2,400 in September. So less sold, which makes sense because again, sold is a lag measure. So really it's coming off of September's pendings, and therefore they were usually listed even the month before. So no real surprise, not much to talk about here on the sold ones, other than it's kind of going in line and in trending with what I would imagine it should be. Now everyone talks about how much inventory is out there. I just proved that we didn't have a lot of new listings coming out in October, so kind of myth busted that part, but we do have definitely more listings than before. This next statistic is going to be overall active inventory at all in October, which is a pretty telling statistic. So right now in October, we had 4,484 active listings. So that is actually a lot to choose from, especially when comparing to last year, where we only had 1,919. So we have over 4,000 active listings this October. Last October, just 1,900. So huge difference in the amount of inventory that is actually available for every buyer to see. Not the amount that came out this month, but the overall inventory that is available. So that's why you're seeing what you're seeing, in that buyers are a little bit pickier, they're negotiating more, things aren't selling as fast. That's all as a result of having more active listings and less buyer demand. That brings us to the next statistic, which is the months of inventory, which is really just another representation of the overall inventory. And we are at 2.2 months of inventory, which is similar to where it was last month, a very far stretch from where it was at about 0.5 months of inventory this time last year. All right, last couple statistics I have for you is days on market and list to sale price ratio. So as I've said, things are taking a little bit longer to sell. Right now we're at an average of 28 days on market, and that's coming off of last year being at 19. So about, looks like 25% or so more time to sell the property. And list to sale price ratio is also down at 98.6%. This is an interesting stat to me because, you know, for a long time there, obviously we were at 110% at one point. For quite a few months in a row, we were hovering around the 108 to 110% list to sales price ratio. So virtually everything that was being sold for significantly over their list price, which is, you know, how hot the crazy market was at that point. Now we're at 98.6%. But something I want to mention that probably doesn't come through in the statistic is that I actually think it's significantly worse than that. The reason is because of price reductions. So a lot of properties are coming to the market and then they're not selling for a few weeks, and then they're having a price reduction. And then at some point they're going to be, you know, get into pending status and then actually sell. And when they sell, that's when that property's statistics come into the MLS statistics that I'm looking at here today. So the reason that this is important is because the list to sale price ratio is based on the list price that it's listed at when the person gets in contract. So for example, if a property was listed at $1 million 3 months ago, and then 2 months ago they reduced it to $900,000, and then the person offered $900,000, that would be in these statistics considered 100% list to sale price ratio, because it was sold for the same amount as it was listed at that given time. So if we look at the overall price reductions in the area, that will tell the real story. So just last week, Area 540, which is east side, east of Lake Sammamish, we had 33 new listings and actually 35 price reductions. So we are seeing a ton of price reductions here in general, and that's all King County wide. I just pulled it for my local area here. But again, since we're having so many price reductions, that list to sale price ratio, 98.6%, is accurate, but it's not telling the full story. Houses are actually selling for a lot less than they're originally listed at. Unfortunately, there's no statistic to pull for sale price versus the original list price. But if it was, it would be significantly less. All right, so next up, let's talk about inflation, mortgage rates, and where the market is heading. So right now, we had the recent Fed announcement, like I started the video with. They raised it 0.75 percentage points. This was on November 2nd, so just a couple days before shooting this video here. The markets didn't react too strongly. They actually were kind of baking in this. This is the mortgage companies were baking in this rate hike. It was pretty well agreed upon that this was going to happen. And so interest rates became a 7 a few weeks ago, and that was kind of in preparation for this happening. So luckily, as of shooting this video, this is a couple days after the Fed announcement, rates have stayed right around there. So they went to 7.2, 7.3, back to 7.2. Right now we're hovering around that area, so the low 7%. So the recent Fed increase didn't directly the same day increase the mortgage rates by 0.75%. It's important to note that the Fed's announcement and the federal fund rate is not directly tied to the mortgage rate. 30-year fixed mortgage rates are tied to the bond market, mortgage-backed securities, and it is completely different than the actual federal fund rate, which is a short-term loan that usually banks use to transfer their money. However, they are strongly correlated. So the fact that the Fed is going to continue to raise their federal fund rate, it will have a ripple effect, and mortgage rates typically do rise with that, but they're usually a lag measure, and a lot of times they are preparing beforehand. So like I said, right now, most of the mortgage experts don't think we're going to see a significant increase in mortgage rates that much more the rest of this year. but it is possible that we might be in the 8s before we end up seeing the downtrend after that. All right, so what does this all mean, and what do I think is going to happen the rest of this year and next year? And is it a good time to buy? Is it a good time to sell? So I think that interest rates are going to hover where they're at and maybe trickle up just a little bit for the next few months. But I do think we're going to see a recovery hopefully next year. I just don't know exactly when. A lot of the experts are thinking spring or summer. I think it's going to be in that general time frame, maybe closer to summer. So that begs the question, is it a good time to buy right now, or is it a good time to sell right now? I think it is definitely a good time to buy this off season or this winter because we're getting significant discounts on properties. We have a lot of leverage and negotiation as the buyer side. So I think you're going to be able to get a really good deal as far as the purchase price of a property, which is very, very important because we can't control the interest rates on any given day. So if you know you're getting a, let's say 20% discount, you're getting a property for $100,000 less than it was, 6 months ago, we know that's a good deal. And the thing about interest rates is that they are still likely to go down at some point. I've mentioned in different videos that six out of the last 6 recessions, interest rates came down during the recession because that's the Fed's easiest lever to pull to actually get out of the recession. And so of course, when we're in a recession, the government wants to get out of the recession. The easiest way and most logical way to do that is to lower interest rates. So because of that, I do believe firmly that interest rates will come down once we've recovered and once they get a hold of inflation. So if you can get a good purchase price and a good deal today, that's locked in. If the house recovers and it comes up to the main value, you already are locked in at that price. And the interest rates, if they change for the better, you can always refinance your house. So I do think it's a pretty good time to buy right now. Anytime in the next 4 months or so, I would think that things are still going to get kind of back on track in springtime. Whether or not interest rates come down by then is still a question mark. I think probably it'll happen after that. But even if they don't, even if we're at 7, let's say in springtime, I still think it's going to be a change market from what it's been the last few months. I think that people will have a little bit less fear in the market, and there's going to be a lot more buyer demand that are trying to still get in at these prices, because if people get an inkling that things are going to kind of go back up again, they're going to want to get in at the bottom, and I think that bottom will be around that time. So I do think we'll have a pretty good spring, and that's when things are going to start climbing again. So prediction-wise, I think we'll see a small, or about a steady pace here the next few months. Maybe we go up a little bit, maybe we go down a little bit. We went up a little bit this month, which was kind of a shock. I didn't think that we were. So I think we'll kind of flatline here for a while. It's a slow season during the winter anyway, which is also why it's a good time to buy. So when we look into 2023, most of the experts that I follow think we're going to be in a pretty normalized market as far as appreciation growth. We should be at the 4 to 6% appreciation in 2023, which is a very normal market. So still buying a house in 2023 should be having a positive appreciation. I think this downturn we're probably right in the middle towards the end of the downturn, in my opinion. We're always guessing, of course. It could continue to go down. I don't know that. But I think we will see an appreciated market in 2023, mainly because of when interest rates go down, I think the demand is going to come back very fast and furious. Even if it's in the summertime, whenever that happens, there's going to be lots of pent-up demand. I know this on my own personal business because of all the buyers that I've worked with that have recently decided, it's not a good time for them, or they're scared, or they just can't afford it anymore because of interest rates. So all those people, they still want to be homeowners, and they would if they could right now. But they can't afford what they want. And so all those people are going to come out of the woodworks at the same time. So if in June next year you can buy a house for $150,000 less than you could the year before, and interest rates are down at 5 or 4, all those buyers are going to want to get in because you're getting a huge discount. Now interest rates are affordable. So if that happens, then the market's going to come back very, very swiftly. So even if we see a little bit of a continued downturn in the first few months of next year, overall the year is going to turn around, and I think we'll see an appreciated market in 2023. As always, thanks for watching, you guys. If you have any specific questions about your neighborhood or the areas that you're looking in to buy, please reach out. We have the Calendly link if you want to book a 15-minute phone call. Shoot me a call, text, DM. I'm happy to talk about it, and we can pull statistics and look really deep in your exact area or neighborhood. So see you next time.